somebody who has not been on business television for almost 1.5 years and now joins us on the show, somebody who looks at macro and micro very closely. We have with us Prabhat Awasthi, now head of Nomura India. Earlier, of course, he was head of equity, but right now he's been elevated to head of Nomura India, and he's joining us on the show. Prabhat, thank you very much for your time. Of course, in your new role, you've been elevated to the country head. Before we talk about markets, talk to us briefly about how does it widen your role at Nomura now?
We are comparatively young as a franchise goes 10 years, and in that short time period, I think we have come a long way. Nomura has all three businesses: equities, fixed income, IBD, and all of them, I think, have traveled a long distance. It's a fairly profitable franchise, and also remember that being an Asia bank, having our roots in Asia, India is an important market for the firm. And as I told you, we have strengthened over a period of time across businesses. I'll take an example. Last year, for example, Nomura in 2017 did 8 IPOs, which was the highest number of IPOs by any foreign bank by Bloomberg League tables. Our research is ranked, in II top 10 on an unweighted basis, top 5 by weighted basis. So this is a franchise which has actually strengthened over a period of time. So from our perspective, we'd like to continue to strengthen it, and that involves a number of things. I think one, obviously, continue to grow market share in the business we operate in, look at other opportunities, and also increase the cross-sell. Finally, sell a lot of our global expertise, especially Japan into India and vice versa. As you know, Japan has, as a geography, has a lot more involvement in India, both at a geopolitical level and also at corporate level. And we would like to take advantage of the opportunities, sort of be a catalyst in the process.
Right. Prabhat, I would request you to just hold on for a second. The earnings season is going on in full swing, and HPCL numbers are out right now. The profitability is higher than estimates. Even the GRM numbers seem to be on the higher side, and probably that's the reason. There was a small spike in HPCL, but of course the street knows that this time around the inventory gain portion of oil marketing companies will also be contributing in a big manner. Right. So that is one of the things that market knows about, and probably that's the reason there is no much big reaction. Prabhat, I'll come to you for in a minute, but we need to just address the numbers. Gaurang Shah is here with us. Gaurang, $7.5 GRM HPCL has done this quarter, but there's hardly any reaction. Do you think that street already knows that large part of contribution is from inventory gains?
That's absolutely true, and one has to also remember that the merger is also on its way as far as HPCL and ONGC is concerned. So my guess is that the reaction is not surprising as far as the numbers are concerned, and belief is that, of course, and let me give a disclosure on both ONGC as well as HPCL, we have a positive coverage, and it could be beneficial for both the shareholders as we go forward from here on, and the entity that will emerge once the merger is through will be quite strong and substantial.
कुछ important है क्या? Avinash Gorakshakar is also here. Avinash, what's your stand on HPCL? The stock is trying to come back from 2.5% lower to almost 1% lower now, so making a comeback on this kind of a number, 7.5% GRM versus 5.5%, and profits have also been higher, almost 700 to 800 crores. What's your reaction to this number and overall as a call on HPCL?
No, I think clearly, Ajay, I think numbers, despite the fact that inventory gains have got factored in these numbers, I think numbers are much better than what the street expected. So to that extent, numbers are definitely better. My sense is I think the markets would obviously look at what is the kind of percentage of inventory gain. But overall, it looks to be a much better number than what the street anticipated. And I think the stock is lying low clearly because I think ahead of the merger, I think now whatever action happens, I think would obviously be seen in ONGC on a consolidated level. So I think HPCL could be at best a market performer. But overall, numbers both on the top line and the bottom line are definitely better than the street numbers.
Gaurang, a quick word. Where would you, what oil marketing companies, all three of them, what would your order of priority be? HVP, IOC?
So BPCL, IOC, HPCL. That's going to be the order of preference.
Right. All right, Gaurang and Avinash, gentlemen, both of you, thank you very much for your time, giving your reaction on HPCL. That's HPCL for you, reacting in trade and a little bit rebound from the lows. But let's come back and talk about markets. There is a big, kind of a correction phase going on. Prabhat, we were talking about your, enlarged role now at Nomura, and of course, you were talking about Nomura's priorities. But if one were to talk about markets now, which is seeing some amount of difficult times, not only locally but globally, what are your thoughts? How prolonged can this weakness be, and what are the factors which are causing it?
So in general, I think our view globally is constructive, and we think that global economy is on a solid footing. It is the growth is improving, and typically when that happens, then corrections are obviously part of life, because in generally bullish economic scenarios, market can sort of have some amount of excess, which gets the froth goes out time to time, and the catalyst can be different. Too much complacency is one of them, and I think what has happened in the last few days is that we have essentially seen some of the froth being taken out, which is actually very good for markets which have been a one-way sort of street. It is always good to see some healthy correction. But our view essentially is that given the economic fundamentals, both globally as well as in India, these will be largely buying opportunities rather than start of something new in terms of trend of the markets.
Prabhat, looking at the way factors are panning out right now, how worried should Indian investors be in your view?
So the way we look at markets are agnostic to investors. I mean, we essentially look at an overall broad picture, and I said, I mean, our in-house view on markets is that the markets will return you a certain number, which is about 11,880 or 11,900, and that is true across investors. And I think from Indian investors' point of view, that return is available to both foreign investors and local investors. I think what is more peculiar about India over the last 2 years, I guess, is that the participation of domestic investors has been extremely high, especially in equities. And I think so long as the alternate opportunities remain comparatively subdued, I mean, I must say that fixed income opportunities have become more attractive with the increase in yields. But there are other alternative opportunities like real estate, etc., which still are subdued. We think domestic investors will continue to remain interested and invested in domestic equity markets.
The third quarter earnings are coming through. What are your thoughts on the quality of earnings which we have seen so far? Bulk of the earnings, just for example, HPCL came out. The numbers are slightly on the higher side, at least our observation is that. What are the trends you are drawing, and what kind of recovery do you see in earnings going far out 2-3 quarters, looking at the quality so far?
So in fact, again, this question was answered in a strategy piece that again was put out by a strategy team. We think that we are in a sort of a structural recovery cycle as far as India is concerned, and that is essentially again stemming from the fact that we think there is a structural recovery in growth in India, led by improving investment cycle, which has been languishing for a long time. A number of factors which were against which were weighing on growth, for example, a prolonged fiscal correction or prolonged decline in capex cycle, weak global growth, weak commodity prices, and a lot of these things, the NPS cycle of banks. A number of these number of sectors in India were in very bad shape. Actually, a bulk of them, a lot of these things have corrected positively, either because of global issues or because of local policy action. And therefore, we are of the belief that from here there are many tailwinds, and structurally the growth rate improves. And when the growth rate improves on account of additional demand, either from exports or domestic sources like capex or more risk taking, typically that will lead to higher earnings growth. On top of that, as I said, things like headwinds like bad loan creation, etc., is largely ending, and we are actually going to see some resolution going forward. So our view is that structurally the earnings growth will be higher going forward than in the past 2-3 years. And that I think is quite clearly visible. The earnings that are coming through, a lot of old economy companies are surprising positively across sectors. I think that will only strengthen, that trend will strengthen. If I'm not incorrect again, the consensus estimates for example, Nifty about close to 20% plus, 21%, which is again a big recovery from the past. And there's no reason that sort of, closer to that range should not be delivered. So, and I think it will probably continue going forward.
Prabhat, what can you share with us on kind of patterns which you have seen in similar cycles in the past when earnings actually rebound or start glimpses of rebound start showing up? How far out do they go? How prolonged can this earnings cycle be?
So we think that it's a start of a multi-year cycle, largely because the cycle will be underpinned by the factors that I talked about, that being taken care of. The investment cycle, which essentially has sort of gone to a bottom, will essentially continue to improve. So as long as that continues to grow, and I think there's a very long room, or the large, there's a long period in which sort of this process will continue, maybe 3, 4, 5 years, and maybe beyond that. The earnings recovery will continue to take place, and it will be very domestic. I think also remember that I don't think you can sort of take a static view of these things. Right now, a number of things are looking very good. Global growth is looking good. So leaving aside sectors, specific factors, global sectors as well as local sectors, I think will continue to do well.
Prabhat, in this kind of an environment that you laid out for us, what strategy would you recommend for investors in the current environment, taking also into account the valuations? Also talk to us about what sectors will lead this kind of earnings growth and where exactly are you underweight within sectors?
So I think, again, I'll refer you to our strategy document, and that actually sort of is bullish domestic cyclicals, financials, autos, some oil and gas. So very domestic plus, some beaten down sectors like pharmaceuticals, I think, are overweight. So these obviously are part of our published strategy document.
Past couple of months, even the political landscape of our country has given investors a lot of nervousness. You look at that as well very closely. How big a factor would that be as a direction giver for the market? And how have you analyzed the reforms so far? And do you fear that 1 year just away from going into final elections, that trajectory could start getting a little shaky?
So reforms, I think, I think we have sort of not. First of all, I think this government has been largely reformist, and there are a number of again dimensions of this. One is the fiscal reform itself, which is visible in budgets, and the other is reforms in sectors, which I think have also been very, very strong across a variety of sectors, be it oil and gas, or be it financials, things that they've done with banking, NPAs, or be it sort of reforms related to taxation, which is GST, or reforms which are sector specific. It could be civil aviation, it could be fertilizers. But the proof of the pudding essentially is that a reform in a sector should essentially reflect in growing or betterment of health of companies in a sector in terms of financial health. And I think as you observe the incremental sort of burdens that the companies are facing in the economy, I think the burden is very light. A lot of these sort of bad loans that you see in the economy were created before the government came to power. So I think there is clearly reforms across sectors are leading to a significant improvement in basic fundamentals across sectors. I don't think they have sort of the government has abandoned the path even the last budget, because the spending growth is not that large, fiscal deficit is not sort of blowing up, so therefore our view is that in general, both in fiscal front, on fiscal front and policy front, the government continues to remain in general reform oriented.
Prabhat, how are you analyzing the trends on the flows side? Last 12-15 months, domestics have clearly dominated. FIs were kind of missing in the game last couple of months, but seem to be coming back gradually this year, at least on a year till date basis. Do you see that trend gather pace?
So our view is that emerging markets, again, I think it's partly led by fundamentals. And if you look at, for example, last year, a couple of years, there was clearly a trade of improving fundamentals of global economy, especially developed markets, with this, as against the emerging markets, which were actually comparatively slower in terms of incremental recovery. Um, our view is that will probably shift, and there will be some more growth accruing to emerging markets as well in terms of incremental delta, and therefore it's quite likely that emerging market will continue to see positive sort of flows going forward. India is obviously an important part of it. Also, is going to go fastest amongst emerging markets, so those flows will probably remain in place.
All right, Prabhat, I will let you go on that one. Thank you so much for taking out time for us on the show today. Hope to see more of you going forward. That was Prabhat Awasthi of Nomura talking about their India strategy.